We're here in Monte Carlo for the Rendez-Vous de Septembre. For AM Best TV, I'm Richard Banks. I'm joined now by Ryan Mather, CEO of Ariel Re. Ryan, welcome.
Thank you very much, Richard.
Ryan, you've been involved in Ariel Re in its various iterations since the very beginning. How do the conditions today compare with other conditions you've seen in your career?
Yeah, it's interesting. We only focus on 5 lines of business at Ariel. We call them the Focus 5. So I'm going to talk about just those lines of business, and the rest of the market you can ask other people about. The first and most important one is property cat, and a lot of talking points here in Monte Carlo. In fact, it is the main talking point, mostly around inflation and is there enough peak zone capacity. So that feels like it's definitely as hard to place business as we've ever seen. I think we go back to the beginning of Ariel, which was 2006. In the 2006-7 years, you saw it was difficult to place it, but this year is probably even harder. I'm not sure the economics necessarily reflect that yet, but I think that's coming. As far as the non-peak zone cat, I think that's still very much in a relatively soft part of the market phase. So that's still a bit disappointing. And I think hopefully we'll see some response this year at 1/1. The other lines of business that we're focusing on, especially in Monte Carlo, cyber is a very big topic. And we're definitely on the front foot there. We see that capacity is constrained. The market is growing like crazy, following the last couple of years of losses. And we're trying to push forward a new product, which is an occurrence product, which we hope will help the market move forward. The last one I want to talk about is the specialty lines, marine and energy. In the post-Ukraine world, there's a lot to talk about. I'm not sure everyone's really got to grips with the losses that are going to manifest themselves as a result of that. And then we've got to think a lot about coverage. So the conditions are all over the place, some really hard, some less so, but certainly an exciting marketplace to be in.
Let's drill down to a couple of those in particular. Cyber's a fascinating one. How well understood is cyber insurance?
Great question. We understand what we understand. I think what I would say is that discipline has really returned to the cyber market. I would say 2 or 3 years ago, the limits being offered were really high, the prices were really low, and the coverage is very varied from one product to the other. I think now we're seeing coverage much narrowed from where it was. The amount of limit being offered per client is really low, and the prices have gone up. So a much more disciplined market than it was. In terms of tail cover and the tail scenarios, we sort of all know what they could be. I'm not sure how well we understand, and until we really see them happen, hopefully we won't, but until we do, we won't fully appreciate the possibility of the loss that we could get.
And from a reinsurance perspective, risk accumulation in cyber seems to be a bit of an issue. How well protected is the industry, do you think?
It's a good question. We don't really know the extent of the tail. I think everyone has their own risk tolerance. Certainly from an Ariel perspective, everything that we do is capped, so we can just add our limits up and we know precisely what that is, and that gives us a lot of comfort. For the primary insurers, they're buying whatever reinsurance they can buy, and the tail is back to them. So that's why we're pushing this occurrence product to help them.
So people's attitude to risk have changed a lot in the last 2 or 3 years. How's the role of insurance changed, do you think?
Again, I can only talk about the products that we sell. I think the last 10 or 12 years post-financial crisis saw the printing presses turned on by the governments and a lot of money in the world chasing probably not enough well-priced risk. So we've seen a slightly ill-disciplined market. We've obviously seen a lot of loss, especially in the cat sector, and the results haven't been very special. Now, I think we're seeing a much more disciplined marketplace driven by the fact that not much new capital's coming in. Reinsurance is very much an unloved asset class because we haven't been able to deliver the returns that we've been promising on paper. So I think for us, we've got to just take advantage of the fact that everyone is now focusing on risk much more and try and get the product right, get the price right, and that will turn into good results ultimately.
So there's a lot of conversation here in Monte Carlo about whether we're in a hard or a hardening market. You've got some interesting ideas about that. Please share them.
Yeah, I think we're in a differential market. I think there are certain parts of the market that are really very hard, and I would categorize US peak zone southeast hurricane as being in a genuinely hard place. It was really difficult to place all the limit required by clients, so that's definitely approaching 10 out of 10 hard. I think the rest of the cat The rest of the cat market isn't quite in that spot. And there are certain areas which I think have been, the price have been going down for maybe 15 or 20 years, just about in a row. And, that needs some attention. And I think the market needs to respond to that. Most other lines of business, I think, are struggling. I think we would struggle to call them properly hard at the moment. I think they're certainly hardening, and I think the tide is probably turning. But Monte Carlo, it's still very early. We've got to wait until 1/1 to see if that really is the case.
So you talked about insurance and reinsurance being an unloved asset class. You've got a little bit of experience in raising money in the capital markets recently. How do you think the situation has changed?
Yeah, very much so. So I go back to my point about the printing presses have stopped turning. And so there is less money in the world, and the amount of risk is growing. We've obviously got in the background climate change. We've got inflation, which grows the nominal values of risk, and we've got to now figure out how we manage to cover the peak zones such as Florida and the southeast of the United States. It's not going to be easy. There aren't many capital providers that are looking to come in this year. I think they all want to wait and see whether we've got our story straight again and whether we've got our businesses running properly before they commit to us.
Ryan, thank you very much indeed.
Thank you.
For AM Best TV, I'm Richard Banks.